Hello, everyone, and welcome to October 11, Friday. Today, IYR is taking the lead in the Tigers League at 18%. So let's go take a look. Here we are, IYR, and actually we had an up opening and a down close. Okay? But the important part is we're at 220. That comes off this, takes us down to about 520 in indebtedness, chipping away at that rock. Also, too, is encouraging. We had a nice move of uptrend here on the MACD, but the stochastic isn't too confirming. It's a little flat line. So we'll do what it is. We are having to point out to you, there's no exits here at the Tigers League. We're still dealing with the full account. Here at IYR, it's a 15 November exit. So what does that mean? That means that this option is if this IYR can go to the moon, but the option is running out of time. So we're going to be hitting the 30-day mark on the 15th of October. So what that's going to mean right now, we are going to be moving our stop to midfield. We haven't reached our target goal, but we have reached our time restriction. So we are going to move here to the midfield. And once we cross into past the 15th of October, we are going to go to the punt team. And the punt team is the last bar low. They'll take the field and hold on to what they can get before they're taken out. We are going to, if this becomes an out, and that's already there at 220, that means we're going to exit with some kind of profit for this trading session, chipping away at the rock, dropping this down into maybe the low 500s. If we're lucky to get a little bit more push, which will ump out of it, we might be able to get maybe under 500 by the time it closes. We'll see what happens. Going on into the loser side of this team, Edison and Pepsi and Dominion. Oh, well, it is what it is. Okay, this is Edison. And we're here at a stop limit because this is a fresh trade. And no, it's not. Fresh trade is set at 95.10. 95.10. Oh, this I'm gonna put. See, this is the biggest problem when you mix typing trades. And if you're going to be doing puts, I would recommend do it in two different accounts. You can carry your losses from account to account, keeping track of it on a spreadsheet. But the bottom line is that when you're in a mindset of doing calls in one account, then you're in a mindset of doing puts in the other. It's a lot easier. But here, this is a mixed account. I got calls, I got puts, I got calls, I got puts. So I do want Edison to go down. Look at this. This is a nice little tracking. Keeps on heading down, makes up for that 3%. And how much does Edison owe us? Edison owes us 442. So we get into a little bit of profit. We start chipping away at this rock, and we'll see where it goes. Going on to Pepsi. Now, Pepsi, you guys switch our hats again. We're now on the call side of Pepsi, which means we're looking for the upside. And Pepsi owes to the Tigers 488. We are down 155. Remember, the Tigers is a smaller account, so therefore you're not going to see a lot of contracts here. We are using a money strategy that when this clears out and gets to if the session was a profit, I readjust my entry contracts, and we enter. If we leave with a loss, we enter again. It'll be another way of doing it. T minus, as we noticed last time. And then when we get to the winner's circle, everybody gets reset back to 1. Which is right here, you're looking at this one. So, okay, so that said, Pepsi is there. It's running in mid-range. We are looking at a 215 stop. 215. That is that's a stop limit. And we are at 332. So we're doing good. We just got to get back up into that zone. Interesting. 488, bought at 488. All right, going on. Dominion, let's knock it out. Let's get this baby put to bed. All righty. Dominion, again, not good. We are in a put zone, and it really definitely is going in the wrong direction. MACD is not doing too good, but look at here. Now, you have to understand, stochastics is not a perfect bellwether, but it a somewhat, let's say, call it a foghorn. You can hear the warning sign, but you can't see the rocks. And there's no lighthouse. The lighthouse is your MACD. So the stochastics is setting off the foghorn. Now look, I have a nice doji here. What does that mean? Well, that means that the possibility of just turning down, going into my put direction, which this time we're at 35%. Also, these are nothing to January, so I have some time here. I don't see, you know what I just realized? There is no stop order. Yeah, I should have a stop order up here somewhere, and I don't. Most interesting. So I'm going to have to consider putting a stop, and as good a place as any, right there, because that's representing. This is representing minus 35%. This up here would be somewhere in the 50 zone, which will be within my parameters. So we'll be doing that. Okay, enough said. Let's go over to the Alpha League. Alpha League, let's just say that we only got one winner on the Alpha League, and that is Nike. And interesting, a doji down with an up gap. Now, up gap, you have to remember, is known as a amateur gap. Why? It's money. The portfolio managers came in here. That's what changed the direction. This is the public taking aware of it. But we got some nice indication. We have a nice little pull here. Remember the foghorn? You know, this foghorn saying we have a potential for an uptrend, and MACD is striking up the lighthouse to let us know. And our team is sitting here in midfield. So moving on, we'll take it out, and we'll now move on to our loser side, XLK. Now XLK was quite interesting. It had a gap up. Isn't that pretty? That is pretty. Look, XLK minus 0.26, $9 short for this trade to go positive. And we get another 260. We're able to kill this low-hanging fruit of SMT. For those who have been following me and those who are joining the broadcast at this time, SMT was a penny stock in technology that went belly up. And I keep an eye on my loss leaders to have them pay me back. And what happened there was they're gone. So where do I get the money from? Well, in real life, nobody. But in stocks, you have an ETF that matches. This is a technology stock. I got the technology ETF, XLK. So XLK is going to pay me back my 268. Once XLK pays off that 268 that SMT owed me, then we'll be looking at XLK, who owes me 1782. So we'll get back our trading capital, and we'll make back our lost profit, our loss, turning it into a paid off in debit, and SMT can be taken off the loser list. They won't even go to the winner circle. It goes to the graveyard because it's gone. All right, moving on. Let's see what we got here. Well, we got quad, and quite interesting. I mentioned this before the last couple of days. It's like really weird. Now, doji, up, down, doji. I mean, this is a poker hand. Look at this. You would have, like, call this 4 kinds in a row plus a wild card or king high. You know, 4 deuces in a row and an ace. That's a real good poker hand. So, but look what happened. It broke out. And look at this move here. And this is our quad. We are looking at a call. I only have one put in here, and that's Walgreen. So there it is. There's quad. And this is kind of nice. Nice encouragement. This is a, for those who understand the 30-day moving average theory, this is a nice setup for an entry, for a setup for a trade in here. We're already in the trade. So what's our expiration? This January, so we got a couple of months to go, but not bad. And remember, we're in a higher account. The higher account is showing here we have 13 contracts too. So let's do the numbers. We take 418 of what they owe us plus they're behind 1215 for a total of 1633 out. Divide that by 13 contracts, which turns out to be 1,300. Remember, one contract in options is 100 shares. We need $1.25 in the option move to get the break even and payback. And how do we figure that out? Well, we figured the delta at 50%. We need $2.51 on the closing price. So 251 plus the closing price was where's the closing price? There it is. Oh, 10.04. I think I'm speeding here. I am right. I'm right. So 10.04. So we're looking at a out price of everything paid back of 416 up here somewhere in this zone of 1255. You know what? Let's put a trend line up there. Yeah, let's do that. Let's put a trend line. Ooh, man, I'm getting good with these drawing tools. Right there. There it is. So quad owes 418, and this is our anticipated return. Can we get there? Well, we have 43 cents to our, we have 43 cents. What I say, we need a $2.15 move divided by 0.43, which is the average true range. And I found out it is from the maximum from end to end, not open to close, and divide 43 cents into 215. We're anticipating this be in 5 days. In a perfect world, it would be 5 days, but as we know, the storms are on their way. All right, enough of my crazy singing. Let's get back to work here. Okay, closing up, let's go now to our put side on Walgreen, and not looking good, not looking good. We are set here with a 50% stop on our Walgreen at 180. We are sitting at 258. So that means that we only have about maybe 78 cents in defense. And we are 5 contracts with 467, and Walgreen owns 595. Yeah, we're in the Alpha League, correct. And I just realized Tigers is 169, but we don't have a Walgreens Tigers trade. All right, PG, let's go. Also, too, we checked, we have no exits here, so we didn't miss anything there. Procter & Gamble is a call. We are in the call mode, and it's gone a little bit sideways, a little down, but it's a funny downtrend, like flatlining, then flatlining. But here's what the encouraging part is. We are at a 50% 230. PG's at 305. So we have about 70, 75 cents defense. But this is encouraging. Once the Cass reaches in this zone, price finally will settle down. Yeah, granted, it can come on down. Nothing stops that. But the indicators are that this is now running out of steam. It's running out of power, and it's got to recharge for the up. So we just write it out. Okay, coming down to our final, and that's XLB. Now, XLB was very interesting today because look at that gap. Pop goes the weasel. Even though it opened here and stopped here, the close, today's close is higher than yesterday's close. And again, what did I tell you about this? This is a novice gap. That means the public is buying into this, and then also possibility portfolio managers who looked at this and said, you know what? maybe we're wrong. Maybe this is a low and we're going to get in now. And but here's the encouraging part. We have our uptrend stochastics. We have an uptrending MACD. We are pushing up against the 30-day moving average line. We are behind 1870, but again, we have 10 contracts. So we'll do the numbers. Take 410 of what is owed plus the 1870 we're behind currently in this session, and divide that by 10 contracts, which makes it 1,000. We need a $2.28 move on the option. That in turn is divided by the rule of thumb of the 50 delta. We don't know what the real delta is, but that's close. 456, 456, and the ATR is $1.20. So divide that. Well, 456. Let me do that first. Let me do this. 456, and the close was 89.54. So plus 89.94. So we're looking at 94.50 for our out. So let's go ahead and do that. 94. Let me look at that again. Put that over here so I don't forget it. Okay, 94.50. Oh, it's right. Ooh, close enough. There it is. So there's our target. Now, remember, it was 456 was the difference, or the move we need for the option to pick up the pace. Divide that by $1.22, which is down here at ATR. And we're looking at 3.7. So round it off for 4 days. So in 4 days, if 4 days, we'll be able to be up here with that ATR. Nothing's perfect. I would anticipate, the rule of thumb is whatever you see in your division of the ATR, double it. So I said 4 days, it'll be 8 days. So 8 days from now, that would be 5 days of next week, the 14th. And next week is the 18th, and then Monday, Tuesday. So somewhere around Tuesday or Wednesday of next week, if this continues, and it's a big if it continues in the right direction, we will be getting out. And that will make it kind of nice. The alpha team will be able to pick up the ball, get some cash in their pocket, and go to work. All right. Well, that said, we'll call it for the day, for the winners and losers. And I thank you all very much. Please drop me in some comments and let me know if what you think. And also too, we can do a tag on video if someone has a specific question about. Well, I did have a question. The other day when we were looking at TLT, let's go back to the charts on that one. A question was brought up in my private group, and they said, why didn't you take TLT when you had the chance to get out with enough money to pay back what was owed and walk out with a profit? And the answer is this. You stick to the rules. If you start saying, okay, I got my money, I'm in profit here, and I said, oh no, I'm going to grab it. Well, when you see this, what are you going to do the next time you see that and it's just on the tip of profit? The point is, you don't know the future, and if you start duffing out, especially when you're into a wave like this, you have no idea that it's going to go up this high. It can. I mean, look back here. Well, I can't go back to much history. Anyway, the point comes down is I stuck to my rules. I set my stop in here, and I got out with about maybe $50, $40 in profit. So TLT still owes Tiger $60. Okay, look what's happening. It's coming on down. It'll hover down here, and then when it turns around and comes right back up again, guess what I'll be? I'll be at the station waiting to get onto the train to pick up my $60. I'll pick up my $60 and then get out with the $60 or better, and then retire TLT off the losers list to the winners list. That's the whole purpose of all these videos that are being coming out. You get told all the time. And the bottom line is that I'm here to prove losers can and will become winners. It's a matter of maintaining your trading strategy, maintaining your discipline, being consistent, and doing the work. Now, if you don't want the work, you like to get the money and make the profit, then you go look for a hedge fund or someone who will do the work for you. And when you pay them the money for it, but then again, you get to enjoy your life and make big money. But that's the explanation of why we didn't take TLT out earlier. We stuck to our rules. We stick to our plan. So with that said, let's call it a week. Let's call it a day. It's Friday afternoon, October 11th, and I wish you all a happy weekend, and we'll see you Monday. Thank you.